So if you are thinking of purchasing real estate here in Arizona, you are not going to want to miss today's video. I'm Kelley Norton. I'm an associate broker here at EXP Realty and the owner of the Arizona Living Group. I'm going to have Rebecca Wyatt in the video today, and we're going to be talking about tax implications and a lot of really great information of why it's great to buy homes in Arizona and what some of the tax benefits might be with Arizona versus other states. So stay tuned because Rebecca is an IRS enrolled agent and she is here to answer some questions and give as much information as she can. So stay tuned, we'll be right back. Hi, I'm Kelley Norton, your AZ Realty lady at EXP Realty. Count on me for all things Arizona real estate. So if you are new to the channel, just a reminder, I am Kelley Norton, associate broker here at EXP Realty, owner of the Arizona Living Group. We help people that look to relocate to or within the Phoenix and surrounding areas. A lot of our clients do move here from other states. A lot of our clients move here to retire. So I have Rebecca here today to kind of have an open dialogue and some conversation about some of the benefits of purchasing a home in Arizona versus other states. One of the things that we want to just kind of right out of the gate talk about here is going to be the property taxes. In Arizona, a lot of folks that are moving from East Coast, other states, they are shocked at how low our property taxes are versus other areas that they're coming from. This is a huge benefit for you, wouldn't you think?
Absolutely, Kelley. The state of Arizona has one of the lowest state income tax limits, so that alone is a significant savings. Our neighboring states, such as Colorado, you're paying 4.5% to 5% state tax on top of the increase in property tax. So yeah. Arizona really makes it affordable. We've seen it, folks coming from the East Coast, even the West Coast, where we're doing returns for them and they're reporting thousands and thousands of dollars, tens of thousands of dollars in property tax. And here in Arizona, they're just stunned that, it's the average is probably $3,000 a year for your proppity tax.
Yeah.
That's a significant savings.
Absolutely, especially when you're retiring here and you're on a fixed income and you're able to sell your home where you are and you're going from these higher taxes. Here it's actually giving you either more purchase power or more savings on your monthly expenses. So
we see that a lot with people who are relocating. In retirement, like you said, you have fixed income. So any way that you can strategize, the cost of toilet paper is the cost of toilet paper. There's really no changing it, no matter where you get it. It is what it is. But some of these other strategies that we like to go into with our clients are making your retirement income stretch as much as you can. And part of that is through the taxation. A lot of folks don't plan for that.
Yeah.
So when you go from paying, again, like Colorado, you're in the 4% and 5% income tax down to 2.5% income tax, significant savings. And that rolls over into everything. It really changes the quality of life that you have and your purchasing power.
Absolutely. Let's chat about cost basis because there is some benefits there too and differences in Arizona.
Absolutely. So for folks who are in that, what I call second adolescence, so when you're in your retirement, you've got the money to do what you want and you've got the knowledge to know not to do the things you shouldn't do. It really puts you, it's a strategic strategy to plan out where you're going to retire and ultimately spend the rest of your life so that you can pass on those savings to your heirs. So let's say mom and dad, they're in their 60s, they relocate to Arizona because cost of living is significantly less in some areas. And
they love the weather, so that's another reason why they're moving here.
They're active, they're loving the weather, the sunshine, taking everything in that Arizona has. And this is where they're gonna be for the rest of their life. So they purchase a house at whatever cost it may be. Let's say it's, back in the 70s, it would have been $30,000. Today, it's more like $400,000. So you purchase that house for $400,000. You live in it, you love it, you take care of it, you nurture it for the rest of your life. It is your place, for your forever home. And then let's say, here we go, 20, 30 years fast forward. Now you're done, peace out, you've moved on, and now the kids are stepping in, they're able to enjoy the benefit of step up in cost basis. So if mom and dad bought that house for $400,000, here we are 20, 30 years later, and the house is appreciated more than double, even some cases tripling. They're able to get a step up in cost basis, so they're not paying capital gains tax on that increase in the property value. So instead of paying capital gains from the $400,000 that mom and dad bought the property for, they're going to pay tax on the $1 million that it's worth the day that mom and dad have passed on. So there's that step up in basis. It's a huge tax strategy. Just planning where you want to live the rest of your life and then settling in, having your roots get grounded, living it, enjoying it, and then once you're done with that property, your kids now have the benefit of the step up in cost basis and can make some educated decisions on how they want to move forward with that property.
Now, do they have to have lived in that home for a certain amount of time before the heirs qualify for that step up?
No, the time frame comes from the date of death. You typically have 6 months to liquidate the asset, whatever it may be. And every asset has its own rules and implications. So make sure that you're speaking with your tax professional on what those rules and how they apply to that particular asset. But in the situation where we're dealing with a primary house, mom and dad can live in it for 6 months, they can live in it for 30 years. And regardless of how long they've lived in it, as long as it is sold after the date of death, you get that step up. If you sell it the day before mom and dad pass, no step up. If you sell it after they've died, then yes, you get the step up. And I know it's a morbid conversation, but it's the reality.
I think it's very, very important. Yeah.
So typically if you wait until after mom and dad pass, you have 6 months grace period, if you will. Make sure that you meet with your realtor and get an evaluation of that property the date of death so that you have a ground basis, again, your step up in basis. You want some kind of documentation to validate that basis. We can't just make up a number saying, well, the neighbor's house was worth this on this day. So you really want to CYA and make sure that you have some documentation, either an appraisal or a professional that deals with this sort of stuff, to give you a formal letter or report showing what that property is worth the date of death. Then typically you have 6 months to dispose of the property, because we all know that not every market it moves as quickly as our current market. So make sure you talk with a tax professional, make sure you meet with somebody who can give you that date of death valuation so that you have documentation if ever the IRS comes back. Because remember, they have 3 years to review and audit a return. But if for some reason they think that there's a frivolous tax return, it's unlimited. So you really want to have your documentation to back your basis step up, because it's a significant savings. If we're going back to our example of $400,000 to $1 million, that's $600,000 of a step up in basis where you're not paying tax on that money.
And we see that all the time in a lot of areas out here in the Valley where they've had that kind of an increase. For example, the area that I grew up in, some people know by zip code, some people know by city. So Scottsdale, 85254, 85032, Northeast Phoenix, that area, that's exactly the type of thing that has happened.
And who knows what's going to happen even in 10 years time.
Yeah.
So it's important that you find the right professionals and you make sure that the information that you're receiving is actual. It's unfortunate, but I have seen where people have been misguided. Not on purpose, but you really need to make sure that you're working with somebody who has the certifications to help you with your situation.
Absolutely. And for those of you who don't know, my husband is actually an appraiser. So his name is Mark, and he is with State 48 Appraisal Services. His last name is Dietz. We have different last names. So anyway, if you do need an appraiser, or you know someone that's going through this type of situation right now, and they need to have some information and they want to talk to a tax professional, well, Rebecca here can definitely help with that. If you need a real estate agent, I'm happy to help. If you need an appraiser, I can definitely put you in contact with Mark, and we will put his information up on the screen for you here as well. Perfect. Now let's talk about some of the other things with the event that someone does pass away.
Kelley, one of the biggest cases that I've dealt with recently was somebody who owned assets in multiple states. So rental properties. They were all over the East Coast. And here in Arizona, we have the luxury of no inheritance tax.
Yep. And we're clients talking right now that are wanting to buy here for that exact reason.
We're talking each state has their own rules. You know, the Fed are the Fed. And when we're dealing with an estate or a trust, there are different rules, and every situation is unique. So please, again, make sure you reach out to a tax professional who is well versed in the subject to guide you through this. But each state has their own rules, and here in Arizona, we have the luxury of no inheritance tax. So we see a lot of folks as they're in their second adolescence, transitioning into their forever home and moving away from the East Coast. Number one, for income reasons, you know, so that they have a little more control over their set income, their fixed income. And then also they get to give their children the step up in cost basis, and then they don't have the hassle of dealing with inheritance tax.
Yep.
It is a huge burden. For instance, Pennsylvania, it was almost $40,000 in tax, inheritance tax alone, on the assets that person owned the date of their death. So no step up, none of that.
Gosh.
It is, what was that property worth the date of their death, and that is what their inheritance tax is based off of. So, you know, plan if you're in the East Coast, West Coast, some of them as well, you're going to have that inheritance tax, where here in Arizona we don't have that, and that's huge.
It is.
You've worked your entire life. Make your assets work just as hard as you did for yourself. A little bit of planning goes a long way.
Yeah, absolutely. And the example that you gave is really great, because we have clients who are literally going through that exact same thing. And I'll have people call us that are the children of someone that, you know, had passed away, and like you said, multiple homes, because a lot of people will have a retirement home here and then they have another home in another state. They'll do half the year here, half somewhere else. So this is really great information to be able to make sure that you're really planning for those unforeseen things. And you know, part of it is seeing, right? Like, you know, it's going to happen eventually. So
Correct.
Planning for that is great. Also, if you're watching this and you don't have a trust, or you're not sure if you should get a trust, I can put you in contact with a financial advisor to help you with that conversation as well, because that's very important. I know there's a few people that actually have had me as a real estate agent put right in there, so that they know once they're passed away that they can have someone they trust handling it for their heirs. So that's always an option as well.
A lot of folks don't understand that when we live a full life, and when we pass, those are big shoes to fill. And if we don't do a little bit of planning now, either with the financial advisor, a tax advisor, even a real estate agent can help put together a roadmap of your life. I am an IRS enrolled agent, but I'm also a fiduciary financial advisor. So when I'm building a portfolio for my clients, we take into account all these strategies and make sure that the pieces of the puzzle are all working together for you, not against you. And just a little bit of time and education on the subjects really makes a huge difference.
Absolutely. And that's why she is so knowledgeable, because she has more information around all of it, not just one piece. So that's great. And we'll have her information up on the screen for you as well towards the end of the video. That way you can reach out and let her know that you did watch the video with Kelley Norton, so that she knows where you got the information, that you're letting her know that you watched this video. So So to summarize the video for you, 3 main takeaways that I really got from it, which obviously I've already known we have lower property taxes here in Arizona. So that's number 1, a great reason why buying real estate here versus some other states is a great option for you. And number 2 is going to be that cost basis.
Huge. Cost basis is huge. So doing some diligent planning, just taking the time to lay it all out there, make sure you fully understand what the implications are, not only to yourself, but to your heirs. and maximize the benefit. Again, you've worked so hard your entire life for these assets. Let's preserve as much of it for your legacy as we can.
And the third one is going to be Arizona not having that inheritance tax,
which could cost thousands of dollars, and most folks don't plan for it. So today we're living our best life and everything is great. We've got a second house or rental properties in other states, and that's wonderful. But what we really need to think about is once we're done with all these toys and assets and having our best life, what happens next? And so building a plan that helps incorporate the step up in cost basis, the inheritance tax planning, it's really huge. And laying it all out, creating a roadmap for your heirs so that they understand what their job is now that they're in charge, and how to best maximize the benefits to the legacy that you've left them.
That's huge. Guys, thank you so much for watching the video, and thank you, Rebecca, for being here. And if we can help you with any of the topics that you heard today, or with a relocation to or within the Phoenix and surrounding areas, please reach out. Calling or texting or just going on the website and clicking the contact us is absolutely wonderful. But remember, we'd love to have some comments here on the video. It helps the video, but it also helps us know if we're doing a good job and giving you information that is useful to you. Also, if you wouldn't mind, subscribe to the channel and click that little bell if you want to be notified when we're putting up new videos. Thank you so much for being here, and until next time, bye-bye.